Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Don't forget to like and subscribe. This will be our last presentation or video of the year. Click a bell so you get a notification of when we're releasing a new video. Michael, welcome. I do like your headwear.
Touche, yours too.
So, Michael, we, often we kind of looking, and we talked last week with Philly about GDP and things moving a little bit better in South Africa. And then we kind of almost get the blind side this week of Mr. Price taking 10 billion rand to go and buy an international company. Bit of a shock to us all, isn't it?
Yeah, Robin, it really, I think what makes this industry so interesting and frustrating is that things can change at any time, and it really is frustrating. Companies can do things and they can change strategy or whatever, but you never quite know what's coming around or what they're planning. I mean, we have a good idea of where the strategy is going, but this really seems to be quite a change from Mr. Price. I think the market's really concerned, Robin. Not one South African retailer has really made a success of international expansion, Woolworths in Australia, it was a disaster. Foschini has expanded into Australia and the UK. I think the jury's still out. It's struggling. Times are quite tough. Even retailers that expanded into Africa. Shoprite went quite aggressively into Africa probably about 6 or 7, 8 years ago. They've pulled back a lot. They still operate in Africa, but some of their ambitions have definitely been scaled back. And it's just, even Mr. Price expanded into Africa, and then in 2019, I think it pulled back completely, realized that establishing the Mr. Price brand in other countries was expensive. It was time-consuming to build a brand, and they've been very successful in expanding in their home market and dominating here. So then when they suddenly come out of left field and say that they're buying a value retailer in Germany, Austria, and some of the Eastern European countries, it really just comes out of left field. It's a big acquisition relative to the size of the company. It's the target, they're buying it from a private equity firm, which is always worrying because private equity firms buy things, dress them up, and sell them on again. And so there's a question mark over whether I suppose there's a question mark over the quality of the business. The profitability has been variable. The store growth has been variable, and it's been around for a long time, but it has gone into liquidation once or twice, this business, and it's trading well at the moment. But I think there's just a lot of questions, and for Mr. Price to suddenly come out and announce a big acquisition without really catching the market by surprise, and the share price reaction was very negative. So I think the real challenge for us as investors, Robin, is at some point, we really like the Mr. Price management team. We think they're a quality outfit. They do well, they deliver on what they do. And so at some point you say, well, do we give the management team the benefit of the doubt? What do they know that we don't know? If you look at South Africa, as much as we're excited about where South Africa is going, excited is a relative term, in terms of if you look at our GDP per capita, and it's probably the same level it was in 2008, 2010. We have got no richer over the last 15 years as South Africans. In most other countries, GDP per capita is rising. That fuels retail spending and consumption and things like that. We just haven't got richer in this country, and I think everybody will attest to that over the last 15 years. So on the one hand you can say, well, SA is struggling and we can look for growth elsewhere. That's very valid. But when you surprise the market with all the concerns that I've just mentioned, the market's had a very negative reaction, and the market wants answers. This transaction doesn't have to go to shareholder approval. It falls below the sort of relevant thresholds, but I wouldn't be surprised if shareholders club together and force a special general meeting, to bring this to the table. But it's really not even clear what the timelines are, whether they're break fees, whether they some of the conditions precedent to ensuring that the transaction goes through. So there's quite a lot of detail missing that I think has really got the market quite concerned,
And Michael, I was reading that the last two sets of financials are not even public. They Mr. Price has quoted them. They haven't been released, and the price earnings ratio on this is 37 times. Earnings, which is
I mean,
just huge,
I think the earnings are a little bit depressed for various reasons, but the full financials aren't available, and they wouldn't be because it's owned by a private equity firm. It's not listed, so they wouldn't be available. But I think given all the concerns, Mr. Price needs to do a lot of work to convince shareholders that this is the right thing to do, and from us as investors, the share price has fallen quite rapidly. We really like Mr. Price. We really like where they're positioned in the SA market. We see benefits coming through in SA. So, do we sell out now, or and we've been waiting patiently for the SA recovery, which is really on the cusp of coming through. So, I mean, I think probably need to let the dust settle on this. Mr. Price is still a great company, and this transaction is going to get a lot of scrutiny. I think, unfortunately, what has happened with Mr. Price is that the management team have lost quite a lot of credibility in this, and it'll take some time to rebuild that credibility, either which way, So we'll just have to sort of see how it plays out. I mean, there might be a bit more volatility in the short term, but I think longer term, the market will sort of settle, and the rationale for the transaction will become clearer, and whether it goes ahead or not. But I mean, if it goes ahead, there'll be a lot more detail. I think that'll need to be provided to the market to make them comfortable.
100%.
Otherwise, I think you're going to have shareholders forcing a vote on this issue, or maybe even clubbing together and forcing a management change, whatever the case is.
Could be hectic. Well, of course, I mean, sometimes these things come in clumps. We had another clump, Famous Brands, announcing that they're going to extend a partnership with Petronas to put their debonaires and steers franchise, I think, on petrol stations in Malaysia. So maybe a bit more capital light, so it's not as concerning, but it seems we've got a
Robin, I mean, Mr. Famous Brands expanded into the UK. It was an absolute disaster. They're still recovering from that. They paid 2.5 billion rand and basically wrote that whole amount off, And so you see, them expanding into Asia, and you think, oh, hold on a second here, Again, it's much more capital light. Petronas will be rolling out all the stores and doing things. They've got to make sure that obviously the quality and things is right. So again, in some ways, I mean, Famous Brands has expanded into the Middle East and things. So it's not that foreign expansion is foreign to them. Sorry, that's a bad choice of words. But we also kind of feel that there's a lot of work they need to do here in the home market, and shouldn't their focus be here? But if they're getting a vector of growth in Asia that they don't have to put much capital behind, well, is that sort of upside optionality for them without much downside optionality, So, but again, the details were quite sparse. Quite often when companies are announcing lots of stuff going into the week or two before Christmas, they're hoping for not a lot of scrutiny because everybody's starting to go on holiday and not focusing on everything, So the skeptic says if you're announcing deals the week before Christmas, it's never a good idea.
Exactly. Well, Michael, talking about Christmas, we did get a really nice Christmas present, didn't we? Consumer confidence.
Actually business confidence.
Business confidence, sorry.
So there's two business confidence indicators. One that's calculated by the Bureau of Economic Research in Stellenbosch, and the other one that's calculated by the SA Chamber of Commerce. The SA Chamber of Commerce released theirs this week. The number was the highest, I think, in 12 or 15 years, even the highest ever. I'm not sure it was the highest ever, but it was certainly the highest in 10 or 12 years. And I think this is exactly what we're speaking about, Robin, that the confidence is turning in this economy. If you just look at the commentary, and especially around the rail, logistics, Sanrail, I mean, even if you look at Eskom's sort of memorandum of understanding with the ferrochrome smelters and trying to bring the cost down and trying to look at innovative ways to come up with solutions to some of our problems. Oh dear, my antlers are falling down. But I think there's a much more pragmatic attitude, and you can see it in car sales. You can start to see it coming through in retail sales and things. So, I mean, all things being considered, next year should be a reasonably solid year for our economy, and I think GDP growth is accelerating. So I think we said basically all this is underpinned by confidence, and as confidence starts to rise, you will get private sector investment and things coming through, and individuals making different decisions. So yeah, I think it's a very nice way to go into Christmas and to start the new year hopefully on the front foot.
Awesome. Well, Michael, thank you for all your input on behalf of the team that come in here to keep investors updated. Thank you for tuning in. We wish you a very good Christmas, a very peaceful new year, and may it be double-digit growth and more than 1.5% GDP growth in 2026. Thank you for tuning in. Don't forget to like and subscribe, and we'll catch you next time. Bye-bye.